Hey guys, this is Joey here, top tier reminder and chief trainer at Trading Impossible. So I'd just like to share with you in this video how you can spot a reversal from the uptrend to the downtrend. So let's say you have been riding a stock upwards and it's kind of like turning downwards. How do you get prepared to get out, or what are the signs that can actually tell you that it's time to get out, it's time to take profit or cut loss if you need to and get out, because the trend can reverse. So what I've done is I actually issued one of these trading call for SpecMan on the January 15, 2016, right? So it was actually a breakdown below some of the key support levels after moving up for about 3 to 4 months. So that's where I issued a call to be cautious, or we couldn't have a CFD sell position for this because there weren't any scripts, but those who have long positions, it's good to be careful. So let's just go on to chart to see why I actually issued a call to be careful, right? So you can see that for SpecMan, okay, since August 2015, it has been slowly moving up gradually, and of course I did issue numerous buy calls as we broke the uptrend all the way from 0.06 to 0.08 to 10 cents, 12 cents, all the way up to 15 to 16 cents. That's where it started to consolidate, right? So that was when we rode the uptrend. So those who have got in somewhere around the 4 cents 6 cents level and sold somewhere, I mean, you don't have to sell at the high, but you can sell probably somewhere at 150 or above 14. I think that would be a pretty good level. But what are the signs that can tell you that the trend is about to reverse, right? So let's just take a look. So for example, after moving up for a while, SpecMan actually kind of consolidated above that 130 to 132 level. You can see that it kind of break above. This was the support around here. It rebounded back to around about 165. So it was hovering from 130 to about 165 for since November to it's about 2 months. So it has been hovering above that 130. So this 130 would be a very good support, and as you can see, as it consolidates, the 20 days moving average starts to flatten out and then start to turn downwards. And from this, what we can see is that the trend has more or less kind of take a turn from the upside to the downside by looking at the channel resistance levels. You can see that it has actually formed lower highs along the way. So instead of, it is not able to cross back above the high that it has formed at about the 165 level. So the high started to fall down to probably about 158, 145, and then it started to approach this 130 level. And then on this day, on the 14th of January, it just broke down. Okay, it just broke down below 130 and it closed at 0.126. So that's a sign that the upward trend or the consolidation phase has kind of ended. And so we need to be careful on any key support breakdowns like this, especially if what we're seeing is there's a channel resistance level and the prices are actually forming lower highs along the way. So that's a sign that the weakness, there's more or less some weakness in the counter. Again, we need to be careful that the uptrend wouldn't continue unless it were to break above these channel resistance lines we are seeing right over here. Okay, it can probably go back to 165 to test again, right? But what we're seeing is that it kind of hit lower and lower and lower to this 130 and it break down. So on this day, I kind of issued a few, I think I issued a sell call, but there weren't any CFD sell positions. But those who have long position, it was a good time to get out. 128, 127, 126. It does not matter. It doesn't matter, because what happens is most people are always thinking about whether you want to cut loss at 127 or 126. To me, once there's a breakdown, I mean, we don't normally want to care about 1 cent or 0.1 cent or 0.2 cent difference here. We just want to get out because we just want to preserve our capital. So if you just want to save that 1 or 2 cents or 0.1 cents, I mean, you queue to sell at 127 and it goes to 125 or 126, and then you just wait there at 127. You might not get it, and it might just go all the way down like what we have seen. So it just, even that 120 did not hold, so it just tanked all the way down to that 10 cents level, which helped for a while, but it came down as well, right? So currently what we're seeing today, there is a dodgy signal which shows that there can be a reversal after a huge sell down. So it actually went to a low of about 81. So the support would probably be about 80 to 81 for now. Okay, so given the huge sell down, there can be a reversal, but currently we will try not to catch a reversal, especially on reversal upwards, especially on this kind of cases whereby the trend is still down. I mean, just that there might be a temp rebound if it were to go above that 10 cents to 98 level, probably of 10 cents, right? So you can see it's still quite a huge range from 8 cents to 10 cents. So unless, I would say it might trade within this range, probably open somewhere here, close down, open and close down. It might trade within this range from 0.088 cents to 10 cents within the next few days to a week, before it starts to have a clearer direction, right? So we still need to be careful. Unless it can go above that 10 cents level, we might start to see a technical rebound back to 11 to 12, then we might see it come back down again. So even though it were to rebound back up above 10 cents, doesn't mean it will just go all the way up. You can just have a short temporary rebound to 120 or maybe even 110 and start to come down again, right? So if that 8 cents were to break down again, okay, we can see it move further down to 0.076. You can see that this support is about low is about 0.075 to 76. Okay, it's a resistance here, resistance here, resistance here. Yep, so 76 and all the way down to 60 as well. So 60 was where it broke up from in October 2005. We are looking at 0.06 and even 0.05 if that 8 cents do not hold. So the point of this, whenever ride the uptrend of a stock, it doesn't mean that it starts to consolidate and then you just hope that it will continue its uptrend. So what we do is we let the market take us out. If it were to start to reverse and things don't look right, even for uptrend, probably we would get out probably at this bar over here, because there's a gap down. Even though it rebounded next day, but at this bar we would probably get out, right? Because the market has taken us out. It broke below the low of this particular day, so we might probably get out here, right? And then it started to consolidate sideways. So even if it's moving in uptrend, we still have our stop loss in place to get out, and we let the market take us out, right? So we need to be cautious. Even though the stock has been moving upwards, we're not want to be too optimistic and then think that it will just continue all the way. So once things don't look good, we get out. Especially on this support breakdown, if you are still holding any position, it's just good to just get out or even just reduce your exposure, or maybe even have a CFD sell positions, right? So yeah, that's it for this video. I hope you have learned something. Thank you.